Hello nieces, hello nephews, it's your Uncle Charles here, and welcome back to my YouTube channel where we do unbiased price action analysis. Hello everybody, Uncle Charles is back from vacation, and as soon as I got back, I just picked up where I left off, covering the SPY, covering the S&P 500, NVDA, Tesla, all that beautiful stuff. And boy, let me tell you, market has been a bit slow with the action intraday. As you guys know, I cover the SPY, I cover NVDA, Tesla, throw some trade ideas out there for my tier 2s and tier 3 members. And of course, I got a TA request room. If you're a tier 3 member, you can ask me to cover any stocks that you want. But yeah, the overall, I had a general lean this morning in the SPY. And I wrote that unless SPY breaks down 471.5 and 467.5, those were two critical levels that I was watching. I wrote my general lean will be with the trend, which is still bullish. Okay, and I wrote here in in the second post actually, 9:27 a.m. 474 is first support with 472 zone below. Resistance is still at 475.5. If it cleared, 477 was in play. And I tell you, it took all day for any action to happen. Okay, I mentioned that I was bullish and the market went up higher, but it wasn't very tradable for a day trader. In my opinion, we had a breakout of my 475 level. 475.5 level broke out, and it only went up like $1 up to 476.58. Not much of a move, $1.10 move. You waited all day for a $1.10 move. It was terrible. That's why, guys, I be covering the NVDA and the Tesla. Okay, like NVDA, for example, I give NVDA its own room. And I write the bull case, the bear case. I wrote here the next fib level is at 490. If cleared or above at open, next target or resistance at 492.6, then 494. You guys can see here, broke out my 490 target at the open. I love it when the stocks make a move at the open. You make quick money, then you can just relax for the rest of the day. But you guys can see here, it cleared 490. It cleared 492.6. Guys, what do we do when a resistance clears? We either buy calls or we look to long or we play it level to level. If you went calls, 490 breakout, 492.6 where you want to take most profits and leave a runner. If you bought calls on 492.6 breakout, 496, 495.5 zone is where you want to take profit and leave a runner. We play it level to level. We play it safe. Risk management first, consistency second, and then we work on profits. And when it comes to the profits, we play it level to level and let our runners do the heavy lifting. But as you guys can see, we had about a $7 pop to the upside. And then for the rest of the day, around 10 o'clock to the end of the day, we didn't get much of a move after that. Just chop. You guys can see why I played level to level. Same situation with Tesla. Opening at the open, we had a false breakdown set up. Tesla, it tried to fake out the bears first, and then it recaptured my 254 level, hit 256, it cleared 256, never broke it back below, and then it went to hit very close, just a few cents shy, 257.96. I had a 258 target, just a few cents shy. Can you guys see why Uncle Charlie just plays it level to level? I don't go for home run moves for a reason, because most of the time, the market is just looking to trap retail traders. Now, if it wants to give us a trend move, that's why I tell you guys, play level to level, let your runners do the heavy lifting. If it is a big home run move, your runners will catch it. You can always add to your winners. Otherwise, play it safe and work on our consistency. We work on the base hits. We don't go for the home run hits. We go for the base hits. Level to level. That's it. Same situation with SPY. If you entered long from 473.73 level or 474 level, I don't do that personally, but if you did, 475.5 is where you want to take profit and leave a runner. Okay? But yeah, I'm just taking the time to explain how I use my levels to trade in hopes that you guys will understand it and be able to emulate it. Okay, you can always use my levels or you can use your own levels as long as you use the price action. That's the point. Sheep style trades when we follow the price action. Preferably, we trade with the traps using the false breakdown and false breakout setups. But overall, the core principle is that we trade unbiasedly and we use the price action to determine what trades we take. If a setup is bullish, we look to buy calls. If a setup is bearish, we look to buy puts. Okay? Now we go on a daily chart. You can see that we have a new 52-week high close. All right? The last close that we had that was high for this year, 2023, was 474.84. We did manage to go a little higher at 475.9. This was last Wednesday, but we never got a close. Today we got a close around 475.65, which is the highest close we had in 2023. And with the last week of 2023, will we get that Santa Claus rally? It usually pours over into the beginning of January if a Santa Claus rally does happen. But looking at this chart, guys, that all-time high is still looking, possible. As a matter of fact, let me go back to 2021. The highest close we had was at 477.7. That will be a resistance level, or can be. And another close before that was at 477-ish. Okay, that's a current resistance level that I'm also watching. If we can actually hold this 475.5 breakout. Okay, so we cleared 475.5. Now let me explain why that's a critical level. It was a sell zone this past week. Okay, you guys can see here today we had some selling pressure, but it wasn't strong, and we broke above. And at the end of the day, it treated that same zone as support. So the role switched at the end of the day. But look at the previous day. Look at here. This was last Friday when we got a rejection around that zone. We also had some selling pressure, false breakout setup, but it was selling pressure around that zone around last Wednesday. And you guys can see each of the selling pressure, it led to the downside. But the next test, the second test right here, it led to a higher low. And then eventually we broke out. And at the end of the day, we treat it like support. So 475.5 is the level I would pay attention to. If it can stay above, that's bullish, all-time high, it's still possible. Okay, and maybe a new all-time high. Keep in mind, January on average is usually bearish. On average, guys, for the last 20 years. 2023's January was obviously bullish one. But on average, there's a tendency that January is a bearish one. But we'll talk more about that when the time comes. But as of right now, overall, charts looking bullish. As long as above 475.5, we can head up to all-time high. The lowest that is possible that bulls could possibly handle is down to 472.5. That's my rising wedge. You guys remember my rising wedge? Okay, and we got that breakout. Well, we had a false breakdown setup last week. I wasn't here. I was on vacation. Shout out to everybody that was supportive of Uncle Charles taking time for himself to rest. I am ready. After a vacation, I'm ready to end this year strong and begin next year strong. So thank you guys for supporting me. But yeah, last Wednesday we had a breakdown. And then Thursday we recaptured that. So that is technically a false breakdown setup. Something I like to tell sheeps to always ask is who was the last to get trapped? Okay? The last to get trapped, in my opinion, based on this price action, were the bears. With this big sell-off, attracting the bears, and the next day it gapped up and recaptured my rising wedge. False breakdown setup, a very good trade setup, the best in my opinion. Okay, so who was the last to get trapped? Bears. And it did lead to some more upside. And like I said, as long as above 475.5, we could still possibly hit all-time high. But like I said, rising wedge is the lowest. I don't want to see a retest, but the rising wedge is the lowest bulls want to see, because if it drops back below, it could be very, very bearish. This false breakdown, this trap setup where they trap the bears, that will get invalidated. If this trap setup, this false breakdown setup get invalidated, that is bearish and a sign that we could head down lower. So breakdown of 475.5 tomorrow would be bearish. Breakdown of 473.7 would be bearish, and breakdown of 472.5 would be a break back below my rising wedge. That would be bearish. Okay, So if the price action is bearish, we're going to look to short, right? That's what sheeps do. I gave you guys the scenario base and the levels ahead of time. So it's up to you guys to trade it unbiasedly tomorrow in real time. Okay, guys. Let's see. Triple Q looking bullish. Looking bullish. I got that next critical fib level at 410.8. That's my 1.5 Fibonacci extension level. It actually closed right around there, 410.8. Interesting. Closed right at resistance. If it can gap up or break above 410.8, you can even round it to 411. We could possibly head up to new all-time high, okay? New all-time high means I have no resistant levels above. I have to allow the triple Q to pick where it wants to pause at. But for what it's worth, I do have a Fibonacci extension level at 416. Okay, so 410.8 clears tomorrow or gets above, we are bullish, new all-time high. To be bearish, it got to break back below 408.7 and 405.4. Those two levels fail, I will switch back to bearish on triple Q. IWM cleared a critical level. I have fib levels from all-time high down to October 2023 low. The 50% fib level, the golden zone of fib levels, is at 203. We cleared that today. As long as above 203, IWM is bullish and we could head up higher. All right? 205 and 207.5 are next targets. I'd only switch back to bearish below 203 and 200 to put 198.75, 196, and gap fill at 193-ish back in play. Okay, guys, let's see. Tesla, we can move up to a higher time frame here. Remove this triangle. Looks like we have ourselves an inside daily candle setup. You guys know I love this setup. So the mother candle was last Friday. Today's candle was a child candle. The level that needs to clear tomorrow is 258.2. And my fib, that's the mother high, 258.22. And my fib level at 259.4. If those levels clear, bullish for Tesla. And we could possibly head up to the top of the rising wedge at 265. All right. Now I have support at 256 and 254, but based on the mother candle's low, the critical one is at 251.3. If those levels fail, bearish with 250, 247, and 245 and 243.5 back in play. 243.5 is the multi-month trend line that I have here. Multi-month trend line. And a breakback low 243.5 would be a false breakout setup, and bears take back control. Okay, guys, NVDA, let me go to a higher time frame. And what I have here, I have fib levels from December 18th high down to December 20th high. Looks like NVDA is recapturing some levels. Okay, I have a fib level at 492.66. That was one of my levels today. It closed at 492.79, a little above it. So tomorrow, some bullish follow through would be to clear 494 and 495.5. Those levels clear bullish for NVDA. Look to long, guys. If below 492.6, that's not a good start for bulls. That could be a good start for bears. Now, if we break back below 490, I would definitely look to short with 480, 46.5, and possibly down to 484 in play. Now, you guys see those wicks around that 484 level. That's a buy zone. So if it breaks down below 484, that means all the buy orders are absorbed. And if there's no buy orders, it's going to be very little stopping NVDA to drop lower. Okay, guys, I hope that made sense. Apple, I'm bearish on it. Why am I bearish on Apple? False breakout setup of that megaphone pattern last week, okay? Follow through, breakdown of 193 or 191.2 is needed. If it breaks down, we could have a lot lower, 188.5 down to 186, okay? I would change my sentiment back to bullish only if 194.5 and 196 clear to put 198 and 200 back in play. Amazon is just chopping, but it does has an inside daily candle setup. The chop range is 154.3 down to 152.7. 154.3 down to 152.7. Watch the break of that range. Above 154.3, bullish, look to long. Below 152.7, bearish, look to short. Okay, AMD finally breaking out that chop range, close above 140 and 142. I am bullish on AMD. It looks like it's trying to end the chop range in favor of the bulls. Now, something we got to watch out about the chop phase. Okay, the markets are trying to fake us out. Look at what happened last Wednesday when the market gave us a breakdown. We gapped up and it went back higher. Now it's trying to break out the chop range. So watch out. If we gap back down, oh, we could head back down lower. Okay, so bears need below 142 and 140 to be bearish. If not, and we stay above 142, we are bullish. If 144 clears, we're likely heading up higher to 146 and my next fib level at 148. Okay, only bears below 142 and 140. Otherwise, stay bullish. Meta, inside daily candle would also chop. The range is 357.2 all the way down to 351.2. Anything in between is chop. Okay, above 357.2, bullish with 360 or higher in play. And below 351.2 is bearish. Look to short, and we are likely heading down lower based on that setup. Netflix also has an inside daily candle setup. Now, first resistance is at 491.4, and then the critical one at 496. 491.4 and 496 clear. I'm bullish. Support is at 490, 488, 486.3. and 485.4. That's a bunch of supports, but the most critical supports that I want you to pay attention to is that 485.4 level. If that fails, bears in control. 482.7, 480, and likely lower would be in play based on the inside daily candle setup. Microsoft gave us a breakout of this white downtrend channel. This was last Friday. Today chopping a bit, not showing much follow through, but if bears want to take back control, they need to break down 372 to put, I would favor 366.8 be tested. That's a fib level as well as my white trend line here that has kept Microsoft in an uptrend since September. 366.8. Only if 372 fail. But if it's above 372 and we clear some resistant levels, 375 and 377, we're likely heading up higher, up to 380, maybe even higher than that, all the way back up to 384, guys. Google, last week it managed to clear 142.38 level. That's a resistant level that I got based on a high back in October. It treated that level as support. If it can bounce tomorrow, it needs to clear 144. Clear 144, we could head up higher to 145.5 or maybe even higher. If we break back below 142.38, though, that's a false breakout setup. We could go back test this blue trend line here. Support's all the way at 140, and below 140 would be another false breakout setup, pushing Google all the way back down, maybe down to 137 and 134.5-ish, guys. All right, here is the option flow. Well, Darkpool levels first. 473.5, we had 2.6 billion in premium there. 473.5. That's a few cents off of my 473.7 support level. Okay, you can use that level, add it to your charts, guys. I have to pay to get this level, but y'all got it for free from your Uncle Chartist. Merry Christmas, Happy New Year. Now here's the SPY filter for 100K premiums or above. This is information I have to pay for, and you get it for free. Why? Because I love you. Every day is holiday for Uncle Chartist, with Uncle Chartist. And guess what? It's bullish. Higher volume of puts, but more money going into calls. Okay, interpret how you want to, but Cheddar Flow is saying it's bullish. Triple Q is bullish. IWM is bullish. Tesla is bullish. NVDA is bullish. Apple is bullish. Amazon, bullish. AMD, nothing for A. Oh, snap, I wrote it wrong. My fault. AMD, bullish. Meta, bullish. Netflix, bullish. What the hell? Bullish for Microsoft and Google. Google with the L. Google with the L is bullish. Guys, it's bullish across the board. I don't know what's going on. I don't know what big money is thinking. We're looking at premiums 100K or higher, and you guys see across the board, it's bullish across the board. Okay, guys, I hope you found value in this video. I hope you guys decide to join my Discord and really be part of my flock. But if not, it's all good. I appreciate you for being here. Peace, goodbye, and let the great Leon sing you out.
Would you take the wheel if I lose control? I'm still lying here. We're talking to